3/4 of the world's iron ore goes into China's steel industry, the world's largest. They have for a very long time been a price taker, not a price maker. China has for a long time wanted this extra clout, so they set up CMRG last year, but it has been a very slow start, slow to get the steel mills on board and slow to get the companies engaging. And what we've learnt now is that they are in talks with the 4 largest, the companies that really dominate the iron ore supply, and they are speaking on behalf or negotiating on behalf of some very large steel mills. So this is the clout that we've been waiting for. Whether it has an impact on prices, it's a little early to say, because the contracts are still, as they stand, based on floating benchmarks. Where we might see some change is on the terms and conditions.
Yeah, this is interesting, isn't it, Clara? Because on the one hand, you might have thought if it does have an impact on prices, it improves the terms that China can achieve, and so is bad news for those mining companies. But on the other hand, as Tom was making the point earlier, this perhaps suggests that China is ready to deliver something better on the growth front, and so that would be positive for mining businesses.
Well, China's coming back from a week-long holiday. The stockpiling before the holiday wasn't particularly bullish, so perhaps people are seeing in this something a little bit positive to come into next week when China resumes trading. Certainly at first glance, it is a little surprising to have seen them go up, but, you know, not that much, and a lot remains to be seen.
Yeah, and iron ore price is currently down in the session, actually, 0.4%. Clara, give us if we zoom out and the bigger picture in terms of the metals and commodities demand coming from China. There's expectations now. This is a week where we've had Citi and other economists actually revising up their forecasts for China's growth. As you say, when China comes back from holiday, we'll get a bit more data in terms of the consumer spend. What is your expectation? How much detail do we have? How much clarity do we have around the demand impulse from China for some of these commodities going forward?
Well, remember, it's not just China that counts. The export markets are very, very important for China. So what Europe does is no less important when you look at things like base metals, which might explain why copper today is as low as it is, coming up to this, I think, the lowest since the end of last year. So when we come back, where we might see a little bit more positive movement is in the construction side, if we do see that begin to pick up. Retail perhaps remains a little tentative. We will see. It is a very, very mixed picture, certainly not as grim as some had expected a few months back, but not quite the recovery many had hoped to see after the Golden Week holiday.